Mickey Dickey here, and I wanted to talk about the downgrade of the U.S. today, and with Fitch and all of their rating system. And I've got a couple of videos on here, and I'll give you some comments in reference to them. And we're going to start here with one of my favorite guys.
U.S. government's credit rating. This is only the second time that has ever happened. The first was back in 2011. That's when fellow credit rating agency S&P cut this rating to the same level, AA+. Fitch now says its move reflects an erosion of governance, which has manifested in repeated debt limit standoffs. Joining us now, Mohammed El-Arian, Allied's Chief Economic Advisor, and Mohammed was formerly CEO and Co-Chief Investment Officer at PIMCO. He's also the president of Queen's College, Cambridge. It's great to talk to you, as always, Mohammed. You said in a tweet that you were puzzled, certainly by the timing of this. I wonder, though, if you are as puzzled by the fundamental case that Fitch is making here, that there is so much dissent that this is really holding back the U.S. from a fiscal perspective.
So the only response I would have to this is why now? What Fitch put in their statement has been true for a while.
And for those of you who remember some of my other videos that I did about this back when we were having the debt ceiling issue, I said it from the beginning. First, they're not going to downgrade, which obviously they did, which is whatever. But if you were going to downgrade, why now? Now, there's a couple of things she's going to talk about here in a second that makes it more political. And I do wonder if there's some political behind this. He's confused about this as well. Because again, if you're going to downgrade this, this is nothing new. This debt limit thing happened back in June. We're 2 months down the road. Why now? What's changed? What's different? Has something gone on that's going to make this worse down the road? Which that's the one part of this.
So why now? And that explains the reaction that I and many others have had, which is first, this is surprising. Second, when you look at the reason, you scratch your head as to the timing of this. And then thirdly, which is most important for our audience, is the expectation that this will have minimal impact on the things that are sensitive to ratings, in particular the credit default swaps, the currency, and the yields. Surprised, but then expecting the market to brush it off, which is exactly what has been happening.
Okay, the market is not brushing this off. The Nasdaq is down over 2% today, which again, makes absolutely no sense to me. I understand what they're saying, that this is an issue, yada, 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 but if you listen to the rest of the video, and I don't want to go through the whole thing here, but listen to the rest of his video, he talks about the fact there's no other options out there. Where are you going to go? Are you going to go to Canada? Are you going to go to Mexico? If you know what we're offering here, we're it. We are the number one out there. And we're going to get to Jamie Dimon here in a second. So let's get to Jamie's video. Those of you who've watched some of my other videos, I've had a problem with Jamie speaking and not following what is reality. And here he's finally talking reality. It means nothing in the scheme of things. Yes, they've downgraded him. Big flippin' whoop. And again, what he's trying to say is that there are other countries out there, Canada, other countries, that are rated higher than us, that are dependent upon us, and not just militarily, economically. So again, none of this makes any sense. And again, why are we doing this now? What is the issue now? Are they trying to bring the market down? Or are they trying to make it so that Powell doesn't do it? Again, I would love to understand the underlying reasoning behind what they're doing, because it makes absolutely no sense to what's going on here. Don't know if I agree with the process about actually getting rid of the debt ceiling, but what he's trying to get at here is this is nothing new. Nothing's changed. It hasn't gotten worse. We are what we are. So again, why are we making an adjustment here? I've got another video here. I love it when these guys come up with this commentary here. So
heard about the Fitch downgrade. They were furious, they were in shock, they responded within minutes. The administration said that Fitch used a flawed methodology. They said that they're also ignoring a resilient economy.
Now, he's not wrong here. He's not wrong with the fact that I do believe they're ignoring a bunch of facts. I believe, again, there's nothing new here. If they were going to downgrade, they should have done this months ago. What happened today? But here's the rest of this.
Treasury Secretary Janet Yellen issued an official statement saying, "I strongly disagree with Fitch Ratings' decision." A senior official in the Biden administration said,
Okay, I don't know, and I know it's Janet Yellen. How many grains of salt do you give to what she says? I'm sorry. It just doesn't mean a darn thing to me that Janet Yellen has anything. So I don't know why we're bringing this up. Janet Yellen says a whole bunch of things and none of it makes any sense. And this next person makes no sense at all.
This is bizarre, and it's a baseless decision for Fitch to make. And the Biden re-election campaign spokesperson blamed Trump and the Republicans for the downgrade. I am not exaggerating.
Okay. I have a hard time understanding how Fitch gets correlated with Trump. I don't know why Biden would bring it up. Biden's re-election campaign is going to bring this up in any way, shape, or form. I don't understand what this has to do with the price of pork. The question shouldn't be how the government's trying to spin this or how the Biden's trying to play it against Trump or Trump's playing again. None of those have anything to do with the real world and how all this is going to work. He goes on to talk about the debt and all these other things and how this is going to be. Again, it's not going to affect squat. There's nothing going to be changed here. You're going to see a little bit of a downtick in the market today. You're going to see a little bit of an uptick in interest rates, okay, because of this. But the market, just like Jamie was going to say, is going to figure all this stuff out on its own. It's not going to be Fitch. It's not going to be the credit rating agencies. None of this stuff has got anything to do with what's going on in this world. Yes, there was a downgrade. Yes, there's going to be an overreaction in the market, as there always is. But what is it going to mean down the road? What does this mean to Apple? Nothing. What does this mean to Microsoft? Nothing. What does this mean to the business world and the entire stock market? Absolutely nothing. It's not going to affect how debt can be taken on by DraftKings. It's not going to be anything to deal with, like I say, Microsoft or Johnson & Johnson or Bristol Myers or any of these companies. They don't care about this. And the market doesn't really care about this. And yes, again, you're going to have an overreaction in it because you've got some people buying, selling, doing whatever the heck. Honestly, to me, the bigger issue of the day is the fact that AMD is down 8%. What the heck happened with that? To me, I'd rather look and focus on business strategies and actually what's going on in the real world rather than this. I do question why today. Again, makes absolutely no sense to me today why we would do it in not 3 months ago or 8 months ago or 10 months ago when all this stuff was going on. Now that it's over, what's different? And that's where I'm going to leave it with you guys. The market's reacting today. Don't overreact in what the market's reacting in a very short period of time. As I continue to say, don't let short-term issues affect your long-term financial plans. There's a lot to go on here. We've got CPI next week. We've got Apple and Amazon reporting tomorrow. Stick with your financial plan. Talk to your financial advisor. Make sure if there's adjustments that need to be made, make them. I'm not saying you shouldn't. All I'm really getting at here is stick to your long-term financial plan. Talk to your financial advisor so you can retire when you want to retire and how you want to retire. Don't listen to these idiots who are going out there telling that the world's caving in. It's not caving in. Jamie's right. We are the best country in the world. We have the most stable economy in the world. Everything is working good. And for once, I will agree with Ed Alarian in this. As long as the Fed doesn't over-tighten, which again, that's the rest of the video, as long as the Fed doesn't over-tighten, we're not going to have a hard landing. It's not going to be perfect, and maybe they're going to have to adjust from the 2% rate, but we're already at 3. 3 is not a horrible number, folks. And this does not have anything to do with inflation. It's got nothing to do with what the Fed's doing. It's got nothing to do with business. So stick with your long-term financial plans. Talk to your advisors. Dickie out.